Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeezes. Today, we're dissecting a very specific company that has landed on our screener, WCT Holdings Company Limited, trading under the ticker WCT. This isn't just about general market theory, we're talking about real numbers, real companies, and real dynamics that could be at play. So buckle up. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on WCT Holdings Company Limited, or WCT. Short company logo/info. This is a technology company specifically in the software application sector operating out of Hong Kong. WCT provides enterprise software solutions, offering tailor-made software, cloud-based software as a service, and white-label software design and development services. With a current market cap of just $3.05 million, WCT is firmly in microcap territory, making its movements potentially volatile. Looking at recent price action, WCT saw a -1.65% change to A. Over the last 5 trading days, it's actually up +2.59%, but looking at the bigger picture, the stock is down -33.89% over the last 30 days. Volume-wise, today saw 178,000 shares trade hands, which is a stark contrast to its 30-day average volume of 6,342,460 shares, meaning its relative volume today was essentially zero's average. This suggests very low current trading activity compared to its recent past. What is cost to borrow and why it matters? So, why are we talking about WCT today? It's because of a critical metric, its cost to borrow. For those new to this, when you short a stock, you're essentially borrowing shares from a broker, selling them, and hoping to buy them back at a lower price later. But borrowing isn't free. Brokers charge a fee, known as the cost to borrow, or CTB. This fee is typically expressed as an annualized percentage. Think of it like interest on a loan. A high CTB means it's expensive to hold a short position, usually because there's high demand from short sellers and a limited supply of shares available to borrow. When a CTB fee exceeds 100% annually, it's a huge red flag for short sellers as they're paying more than the stock's value each year just to maintain their position. Why this stock is hard to borrow right now. Now let's connect that back to WCT Holdings. WCT has appeared on our hard-to-borrow screener for a very compelling reason. Its annualized cost-to-borrow fee currently sits at a staggering 679.5%. Highlight CTB number to put that into perspective. Short sellers betting against WCT are paying nearly 7 times the stock's value per year just to stay in their positions. Even more dramatic is the CTB momentum. This fee is surged by +428 percentage points over just the last 5 trading days. This isn't a slow build. This is an explosive increase in the cost of shorting WCT. Combine that with an incredibly low 35,000 shares currently available to borrow, against an estimated float of 0.9 million shares, and you have a recipe for extreme borrow scarcity. Our internal composite squeeze score, which combines factors like CTB level, momentum, borrow supply, float, and technicals, currently gives WCT a reading of 48.6 out of 100, indicating a notable, though not yet extreme, level of interest. Squeeze mechanics explained. So, what does it mean when a stock like WCT is hard to borrow with such a high CTB? It means the short sellers holding positions are under immense pressure. A short squeeze happens when the price of a stock starts to rise, forcing short sellers to buy back shares to cover their positions and limit their losses. This buying action further pushes the price up, creating a feedback loop that can escalate rapidly. A high cost to borrow only amplifies this pressure, as short sellers are not only losing money on their position but also paying exorbitant fees daily. If the supply of borrowable shares shrinks, as it has for WCT, it becomes even harder for new short positions to open, and for existing shorts to manage their risk, potentially trapping them. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have incredibly strong conviction that the stock will eventually fall significantly, making them willing to pay these high fees. Dilution risk check. One of the biggest risks in the micro-cap space, especially when looking for short squeeze potential, is dilution. Dilution occurs when a company issues new shares, increasing the total share count and often decreasing the value of existing shares. If a company can simply flood the market with new shares, it can provide an easy exit for short sellers to cover their positions, or simply drive the price down, completely negating any short squeeze thesis, even with high CTB. Our checks show good news for WCT on this front. We found no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days. Furthermore, there have been no recent reverse splits found for WCT in our lookback window, which can also sometimes be a precursor to further dilution. Let me quickly reiterate our disclaimer for everyone joining us, or as a reminder. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For WorldChange Holdings, with its microcap status, software sector focus, and these extreme borrow dynamics, here's what to keep an eye on. Show WCT chart first. Continued changes in its cost to borrow. Does it climb even higher? Second, the number of shares available to borrow. If that 35,000 number keeps shrinking, the pressure intensifies. Third, watch for any significant volume spikes in WCT. Remember, today's volume was a fraction of its average, suggesting low current interest despite the borrow conditions. A sudden surge in volume could indicate a change in sentiment or catalyst. Finally, observe the price action for WCT. Can it break out of that recent -33.89% 30-day downtrend? Remember, our composite squeeze score of 48.6 suggests it's on the radar, but not yet screaming for squeeze. WorldChange Holdings Company Limited, WCT, presents a fascinating case study with its astronomical 679.5% cost to borrow and rapidly shrinking borrowable shares. It's a compelling example of a stock showing significant short interest pressure. Understanding these unique dynamics for companies like WCT is what helps us all become more informed participants in the market. Again, this is for educational purposes only. If you found this deep dive into WCT insightful, please hit that like button, subscribe for more unique stock analysis, and let us know in the comments what other hard to borrow stocks you're watching. We love hearing from you.